Impact Report, projected 30% increase in efficiency for shipping, agriculture and tourism industries by Q1 2025. How China's $500 million commitment reshapes the global competitive landscape. Date, February 3, 2025. Overview. In a transformative move poised to reshape the global economic landscape, China has announced a $500 million investment aimed at significantly enhancing efficiency across the shipping, agriculture, and tourism sectors. Projections indicate a remarkable 30% increase in efficiency by the first quarter of 2025, a development that is garnering global attention and positioning China as a pivotal player in the evolving international marketplace. Investment and efficiency gains. China's strategic investment is expected to catalyze substantial improvements in efficiency within these vital industries. 1. Shipping. The shipping sector stands to benefit from advanced logistics technologies and infrastructure upgrades. Innovations in real-time tracking systems, automated ports, and improved supply chain management are expected to streamline operations and reduce costs. 2. Agriculture. In agriculture, the infusion of capital is likely to accelerate the adoption of smart farming techniques, including precision agriculture, which utilizes AI and IoT to optimize crop yields and resource use. This shift not only aims to increase productivity but also to ensure sustainability in food production. 3. Tourism. The tourism industry is set to leverage digital platforms for enhanced visitor experiences and efficient resource management. Technologies such as AI-driven customer service, improved booking systems, and smart tourism solutions will transform how tourists interact with destinations, leading to better overall experiences. China's economic transformation. At the World Economic Forum in Davos 2025, Vice Premier Deng Xuexiang emphasized themes that are critical to China's economic evolution, including high-quality growth, a focus on sustainable and balanced economic development, moving away from the previous model that relied heavily on exports and infrastructure investment. Green transition, a commitment to environmental sustainability, particularly in the context of electric vehicles and renewable energy sources, which are becoming central to China's industrial strategy. Openness to global markets, a reaffirmation of China's commitment to reducing tariffs and enhancing market access, with an overall tariff level reported at just 7.3%. This is part of a broader strategy to attract foreign investment and foster global economic collaboration. Global collaboration and engagement. The discussions at Davos highlighted the necessity for collaboration among nations, particularly in the context of U.S.-China relations. Leaders from ASEAN nations emphasized the importance of engaging with both superpowers to navigate geopolitical tensions while seizing opportunities for mutual growth. The sentiment was clear: while competition exists, the need for cooperative approaches to address global issues like climate change and technological advancement is paramount. Technological advancements. China's commitment to technological innovation was a focal point at the forum. Electric vehicles (EVs). China's rapid advancement in the EV sector showcases its manufacturing capabilities, further supported by robust public-private partnerships. The country is positioned to lead in the global transition to electric mobility. Artificial intelligence (AI). The unveiling of China's latest AI development, the DeepSeek model, underscores the nation's ambition to lead in frontier technologies. This model demonstrates exceptional performance in reasoning tasks, highlighting China's capability in producing cutting-edge technology despite external pressures. Challenges and geopolitical tensions. Despite these advancements, the backdrop of geopolitical tensions remains a significant concern. The U.S. designation of major Chinese corporations as military-affiliated entities illustrates the complexities facing China in its global operations. However, the consensus at Davos was that division among nations would yield dire consequences, emphasizing the importance of collaboration. Timeline of events. 2023 – Announcement of the $500 million investment by China to boost efficiency in key sectors. Early 2024, projections for a 30% increase in efficiency by Q1 2025 begin to circulate alongside discussions on China's economic transformation. January 2025, World Economic Forum in Davos, where Chinese leaders present commitments to high-quality growth and international engagement. Post-Davos 2025, ongoing dialogues regarding the implications of China's investments and technological advancements continue amidst geopolitical tensions. Common themes and divergences. The discussions highlighted a complex interplay of opportunity and challenge. Both domestic consumption and technological innovation emerged as key drivers of China's future growth. While some narratives stressed the geopolitical landscape and its implications, others focused on economic metrics and the potential for efficiency gains. This multifaceted narrative underscores the interconnected nature of global economic dynamics. Conclusion: China's substantial commitment is set to enhance efficiency in pivotal sectors, reinforcing its role as a major player in the global economy. As the world navigates an increasingly complex geopolitical environment, China's strategic investments and technological advancements signal a shift toward a more interconnected and collaborative global economy. The developments from Davos 2025 showcase the potential for significant progress, yet also highlight the necessity for continued dialogue and cooperation among nations to address shared challenges. The content surrounding China's $500 million investment aimed at enhancing efficiency in shipping, agriculture, and tourism by Q1 2025 reveals several counterintuitive insights that challenge conventional narratives about global economic dynamics and China's role within it. Here are some of those insights. 1. China's commitment amidst geopolitical tensions. While many observers might expect geopolitical tensions, particularly with the U.S., to stifle China's global engagement, the narrative suggests the opposite. China's leaders, including Vice Premier Deng Xuexiang, emphasize a commitment to openness and international collaboration even in a climate of suspicion and competition. This stance highlights a counterintuitive approach where China seeks to enhance its global economic integration while simultaneously addressing concerns from other nations about its rise. 2. Economic shift from exports to domestic consumption. Traditionally, China's economy has been heavily reliant on exports and infrastructure investment. The counterintuitive aspect here is the recognition that this model is reaching diminishing returns and that China is pivoting towards domestic consumption and advanced manufacturing as new growth drivers. This shift suggests a profound transformation in China's economic strategy, which could lead to greater stability and sustainability in its growth trajectory rather than the expected instability that might accompany such a significant change. 3. Technological advances as a competitive advantage. The discussions around China's advancements in electric vehicles, EVs, and artificial intelligence (AI) reveal a counterintuitive narrative. Rather than being hindered by technology export restrictions, China is leveraging its domestic capabilities to innovate and lead in these sectors. The notion that these restrictions would stifle innovation is challenged by evidence of China's rapid technological progress, suggesting that it may be better positioned than previously thought to compete globally in emerging technologies. 4. Global collaboration over isolation. Despite the rising tensions between superpowers, there's a strong emphasis on the necessity of global collaboration to tackle pressing issues like climate change and technological advancement. This perspective counters the notion that nations will increasingly turn to isolationism in response to geopolitical challenges. Instead, there is a recognition that interconnectedness remains essential for addressing global challenges, potentially leading to unexpected partnerships and alliances. 5. Consumer behavior and economic health. The notion that China's economy is robust despite anemic consumption levels and high savings rates could be viewed as counterintuitive. Many might assume that high savings indicate economic weakness or lack of confidence among consumers. However, the preference for saving over spending, attributed to a cautious approach in uncertain times, may actually reflect a broader strategy for long-term financial health among Chinese consumers. This behavior, while potentially slowing immediate consumption-driven growth, could lead to a more sustainable economic environment in the long run. 6. Interdependence in the electric vehicle sector. The assertion by industry leaders that the EV sector will require a global effort rather than being a singularly national endeavor challenges the idea that countries can or should pursue technological advancements in isolation. This perspective shows a recognition of interdependence in innovation, suggesting that collaboration across borders might be more beneficial than competitive isolation. 7. Investment as a strategic tool. The $500 million investment aimed at increasing efficiency in key sectors may seem modest in the context of China's overall economic scale. However, the projected 30% efficiency gain suggests that targeted investments can yield significant returns, challenging the conventional wisdom that only massive investments yield substantial economic benefits. This perspective encourages a re-evaluation of how smaller strategic investments can effectively reshape entire industries. 8. Resilience in the face of challenges. The juxtaposition of China's economic resilience against the backdrop of geopolitical pressures reveals a counterintuitive narrative of strength amidst adversity. While many may view China as vulnerable due to its international challenges, the emphasis on adaptability and transformation within its economy indicates a robust capacity to navigate and thrive despite external pressures. These counterintuitive insights underscore the complexity and dynamism of China's evolving role in the global economy. They suggest a landscape where traditional assumptions about economic behavior, international relations, and technological competition are continuously being challenged and redefined. The report outlines China's strategic $500 million investment aimed at enhancing efficiency across critical sectors such as shipping, agriculture, and tourism, projecting a 30% increase in efficiency by Q1 2025. While the headline figures and themes are noteworthy, several important nuances and deeper implications are often overlooked, which are significant for understanding the broader context of these developments. 1. Transformative nature of the investment. The investment isn't merely a financial commitment, it's indicative of a broader shift in China's economic strategy. This shift is from a reliance on traditional manufacturing and exports towards a focus on high-quality growth, domestic consumption, and advanced technologies. Such transitions are significant as they may redefine global supply chains and economic dependencies. The emphasis on smart farming and advanced logistics suggests that industries typically seen as low-tech are about to experience significant upgrades which could alter the competitive dynamics globally. 2. Geopolitical ramifications. The report highlights the geopolitical tensions surrounding China's economic engagement, particularly regarding U.S.-China relations. While many discussions focus on economic metrics, the implications of China's investment extend into the realms of international diplomacy and security. The U.S.'s labeling of Chinese firms as military-affiliated entities, for instance, could lead to increased scrutiny and potential sanctions, which in turn might affect global businesses that engage with China. This geopolitical backdrop is crucial because it can deter foreign investment and influence global market strategies. 3. The role of ASEAN in global collaboration. The emphasis on ASEAN's perspective and the call for pragmatic engagement with both the U.S. and China is often underappreciated. Regional leaders' comments reflect a recognition of the necessity for balanced diplomatic relations. This is significant because it highlights a potential pivot towards multilateralism in a time of increasing bilateral tensions between major powers. The role of ASEAN could become a linchpin in global trade discussions, serving as a mediator and facilitator of economic cooperation. 4. Technological leadership and innovation. The report's mention of China's advancements in electric vehicles and artificial intelligence serves as a reminder of how technological innovation is intertwined with economic strategy. China's development of the DeepSeek AI model, for instance, underscores its ambition to lead in frontier technologies despite external pressures. This aspect is significant because it illustrates how technological leadership can be a tool for economic leverage and influence in global markets, potentially reshaping industries beyond China's borders. 5. Domestic consumption and economic resilience. The insights regarding domestic consumption reveal a critical narrative that is often overlooked. While the focus is on efficiency gains, the underlying issue of consumer behavior and economic resilience is crucial. The report notes that consumer spending in China remains subdued due to high savings rates. This points to a need for structural reforms that not only enhance efficiency but also stimulate consumer confidence in spending. If not addressed, this could limit the effectiveness of the investment and the anticipated efficiency gains. 6. Environmental considerations. The mention of the green transition in China's industries, particularly in electric vehicles and renewable energy, is often overshadowed by economic discussions. However, the environmental implications of China's push for efficiency are significant. As the world grapples with climate change, China's commitment to a low-carbon transition could influence global climate policy and set precedents for sustainable practices in manufacturing and agriculture. This shift not only affects domestic industries but has the potential to impact global environmental standards and practices. 7. Long-term global economic dynamics. Finally, the report hints at the long-term shifts in global economic dynamics resulting from China's strategic investments. The interconnectedness of global economies means that changes in China's efficiency and production capabilities will reverberate through international markets. This could lead to shifts in trade patterns, investment flows, and competitive advantages for various nations. Countries that adapt to these changes and engage with China strategically may find new opportunities, while those that resist may face economic isolation. In conclusion, while the headline figures from China's investment and the anticipated efficiency gains are significant, the broader implications surrounding geopolitical tensions, technological advancements, domestic economic conditions, and environmental considerations are equally crucial. Understanding these nuances is essential for grasping the full impact of China's commitment on the global competitive landscape and the potential shifts in international relations and economic strategies. 1. Investment and efficiency gains. The cornerstone of China's projected 30% increase in efficiency across the shipping, agriculture, and tourism industries is its strategic $500 million investment. This financial commitment is expected to drive transformative changes through the implementation of advanced logistics technologies, smart farming techniques, and enhanced digital platforms for tourism. The implications of these efficiency gains are far-reaching, potentially positioning China as a leader in these sectors globally. An in-depth analysis can explore how these improvements may impact global supply chains, food security, and tourism dynamics, as well as the competitive positioning of China relative to other nations. 2. China's economic transformation. China's shift from an export-driven economy towards one focused on domestic consumption and advanced manufacturing is a significant theme emerging from the World Economic Forum in Davos 2025. Vice Premier Deng Xuexiang's emphasis on high-quality growth, green transitions, and reforms towards a more open economy illustrate China's strategic pivot in response to both domestic needs and global economic conditions. A detailed discussion could analyze the long-term sustainability of this transformation, the potential for innovation-driven growth, and the challenges China may face in transitioning its workforce toward advanced manufacturing capabilities. 3. Global collaboration and engagement. The importance of international collaboration amidst geopolitical tensions is underscored in the discussions at Davos, particularly in the context of U.S.-China relations. The necessity for ASEAN countries to engage with both superpowers highlights a critical aspect of global diplomacy and economic strategy. An exploration of this theme could delve into the implications of regional partnerships, the role of multilateral organizations in fostering cooperation, and the strategies nations might adopt to navigate the complexities of a bipolar world order while advancing their own economic interests. 4. The technological advancements and geopolitical challenges. China's advancements in electric vehicles and artificial intelligence are touted as key drivers of its economic transformation. The discussions surrounding the DeepSeek AI model and China's electric vehicle sector showcase its commitment to leading in frontier technologies. However, these advancements are juxtaposed with significant geopolitical challenges such as the US's designation of Chinese firms as military affiliated. An in-depth analysis could investigate the implications of technological competition on global markets. The strategies China might employ to mitigate the impact of geopolitical tensions and how these dynamics will shape the future landscape of technological innovation and international collaboration. These 4 points encapsulate the transformative potential of China's investment, the implications of its economic shift, the significance of global collaboration, and the interplay of technological advancements with geopolitical realities, providing a comprehensive framework for analysis and discussion. 1. The Marshall Plan 1948–1952. After World War II, Europe was left devastated, and the U.S. initiated the Marshall Plan to provide over $12 billion, equivalent to around $130 billion today, in economic assistance to help rebuild European economies. The plan aimed to restore economic stability, promote trade, and prevent the spread of communism. By improving efficiency in production and restoring infrastructure, the Marshall Plan significantly boosted European economies, leading to a period of unprecedented growth and integration, reshaping the geopolitical landscape of the time. 2. The Green Revolution 1940s to 1960s. The Green Revolution refers to a series of research, development, and technology transfer initiatives that occurred between the 1940s and 1960s, which significantly increased agricultural production worldwide, particularly in developing countries. With the introduction of high-yielding varieties of seeds, chemical fertilizers, and irrigation techniques, countries like India and Mexico saw dramatic increases in food production. This revolution not only alleviated hunger but also transformed agricultural practices, enhancing efficiency and productivity and reshaping global agricultural markets. 3. The rise of Japan's economy 1960s to 1980s. Post-World War II, Japan underwent a rapid economic transformation, often referred to as the Japanese economic miracle. Through government-industry cooperation, technological advancements, and a focus on exports, Japan's economy grew at an average rate of 10% annually from the 1960s to the 1980s. Key sectors such as automotive and electronics became globally competitive, reshaping the global economic landscape and leading to Japan's emergence as one of the world's largest economies. The efficiency gains achieved during this period were pivotal in setting new standards in manufacturing and corporate management practices globally. Future outlook: projected 30% increase in efficiency for shipping, agriculture, and tourism industries by Q1 2025. How China's $500 million commitment reshapes the global competitive landscape. As we look towards the future, particularly the anticipated outcomes by Q1 2025, China's $500 million investment to enhance efficiency in crucial sectors such as shipping, agriculture, and tourism is expected to significantly alter the global economic landscape. Here are the key predictions and implications of this investment. 1. Efficiency gains and technological integration. By Q1 2025, the anticipated 30% increase in efficiency across these sectors will likely arise from substantial technological integration and innovations. In shipping, advancements in logistics technology, including automation and AI-driven routing, will streamline operations, reduce costs, and minimize delivery times. Similarly, the agricultural sector will benefit from smart farming practices such as precision agriculture and IoT technologies, which will enhance crop yields and resource management. The tourism industry will also see transformation through digital platforms that optimize visitor experiences, manage resources more sustainably, and facilitate real-time data analysis for better decision-making. This integrated approach is expected to create a more responsive and resilient global supply chain. 2. China's role in global economic transition. China's commitment to high-quality growth and its focus on domestic consumption, is highlighted by Vice Premier Deng Xuexiang, signifies a shift from traditional economic drivers towards a more sustainable model. This transition is projected to enhance China's influence in global markets, allowing it to emerge as a leader in advanced manufacturing and green technologies. As China continues to bolster its domestic economy, It may lead to an increase in exports of these advanced technologies to other countries, further reinforcing its position in global trade. This could create new trade partnerships while potentially increasing competition with established economies, particularly in sectors like electric vehicles and AI. 3. Geopolitical dynamics and global collaboration. While optimistic projections abound, the geopolitical climate remains complex. As tensions between the U.S. and China persist, especially with the U.S. designating major Chinese corporations as military affiliated, navigating international relations will be crucial. The emphasis on collaboration highlighted at the World Economic Forum indicates a potential for countries to seek common ground amidst rivalry. By 2025, it is likely that regional players, particularly in ASEAN, will increasingly prioritize balanced engagement with both superpowers. This collaborative approach could lead to enhanced regional economic stability and shared initiatives in technology and sustainability. 4. Challenges and risks ahead. Despite the positive outlook, several challenges may impact the realization of these projections. Economic slowdowns, fluctuations in global demand, and potential trade barriers could hinder efficiency gains. Additionally, if geopolitical tensions escalate, they may disrupt supply chains and investment flows, presenting risks for both China and its trading partners. China's economic resilience will be tested as it shifts its focus to domestic consumption while managing international expectations. Maintaining a stable domestic market will be vital as consumer behavior and confidence directly influence economic growth. 5. A future of sustainable development. The commitment to a green transition is expected to shape the future of these industries. By 2025, we may witness a marked increase in sustainable practices within shipping, agriculture, and tourism. Driven by innovation and regulatory frameworks aimed at reducing carbon footprints. The integration of renewable energy sources and eco-friendly practices will not only enhance efficiency but also align with global sustainability goals. China's advancements in electric vehicles and renewable technologies, as showcased at Davos 2025, will likely position the country as a leader in the green economy. This could spark a global shift towards sustainability, influencing other nations to adopt similar practices, further contributing to a collective effort to combat climate change. 6. The path forward, opportunities and strategic engagement. As the global landscape evolves, opportunities for collaboration will emerge, particularly in technology and sustainable development. Countries could benefit from shared research and development initiatives, knowledge exchange, and joint ventures that capitalize on China's advancements in AI and electric vehicles. Engagement between China and other nations is essential to navigating the complexities of the current geopolitical environment. By reinforcing partnerships, countries can work together to address global challenges from economic recovery post-COVID-19 to climate change and technological advancements. Conclusion. In summary, China's $500 million commitment is poised to significantly enhance efficiency across the shipping, agriculture, and tourism sectors by Q1 2025, reshaping the global competitive landscape. While the projections are optimistic, they must be viewed alongside the geopolitical challenges that may impede progress. The future will require a delicate balance of innovation, collaboration, and strategic engagement to harness the full potential of these developments and address the intricacies of an interconnected world.